Hmm. Hello, everyone. Hello, hello, hello. Welcome, welcome along. Welcome along. Hopefully, I'm sounding a bit better. I'm in my office, a new office. I've soundproofed it a bit, and so the sound should be quite good. Can you hear me? Can you see me? Um, yeah. And the only thing that's wrong is that our internet is not that good. So cool. Thank you very much. So even though I've got it piped in, like I said, from my last house to this house, so it's a lot nicer house, this, but the internet is half the speed, and we got like twice as many devices, so it doesn't really work. Nigel can hear and see. By the way, if you're new to this, welcome along. I haven't really started yet. Just checking everyone can hear and see me. But you can join in the chat. You can text chat if you have any questions or if there's anything you want to bring up, by all means, or you can talk with your voice. That's a good thing there. I think, if you got one, use it. Okay, let me just check. Yeah, I've disabled the waiting room, so anyone can come straight in now. Neat evening, folks. Evening all. Evening all. Well, okay, without further ado, who said that? Someone used to say that. Without further ado. Uh, okay. Wednesday weekly webinar. It should be no echo. I've got these acoustic sound panels up. I experiment with a couple of them. I put a nice little rug down as well. Yeah, I've got a little video somewhere. I'll post a little video on the site actually of the construction of the office. It's nice in the garden, cedar oak on the outside. It's very nice, or cedar wood. But yeah, it's come from nothing to this little home. I've got a TV in here, everything. In fact, last weekend, a friend of mine came up with his wife, and we watched the South African New Zealand game in here. Nice little den. Anyway, 4th of September. 2024, Q3, of course. It's been an awful week because of, America. America leads everything. Say, America sneezes, the rest of the world catches a cold because it is the biggest capital market. And we have got, America and China slowing. So I don't think it's looking good. But also, just in the distance, in the near distance, is the Fed, who's going to reduce interest rates. How will that work? Anyway, we'll talk about that in a bit. Tonight's topics. My holdings, as always, bit of a change there. And also, I want to look at this. Is the US headed for a recession? What does it mean for UK stocks? By the way, I do think they're headed for a recession. But like you say, reducing interest rates, yeah, it's good for equities. Watch this. Ignore we're coming into results season now, so there's going to be quite a few results over the next few weeks. So we'll look at companies and the latest results on the microcap list. If you have any companies you want to suggest, now microcap list is essentially sub 100 million market cap. I don't mind if it goes up a bit more than that, 120, 150, but they've got to have revenue, got to be profitable. If they're not quite there, we'll put them on a watch list and they can join the microcap list. But yes, anyway, so let's start. My holdings, that's it there. You can see today, Manolete Partners stop loss kicked in on that. Let's be honest, they really financial, they can't help that. But the two worst days of the month, pretty much, not of the month, the last month or so, and they released results. And it did take a bit of a hammering yesterday and today. And my stop loss kicked in at 116. I posted that on the blog, by the way. If you are new, like I said, if you go to the blog, you can see what I'll do here is on the blog here, you can see whenever I make a change, pretty much, you can see there my holdings, and I'll make commentary on it. But yes, and you'll see the update there. I'll talk about, scroll down and you can see the little thing. I'll do updates whenever I need to, whenever anything changes pretty much. But it's been a sell-off for lots of stocks. Nevertheless, my biggest holding, Big, still 38% up. Cambridge Cognition, it's looking quite good in the chart. It needs in fact, it keeps threatening to break. I'll show you. I'll show you on the chart this. COG. It was one of the stocks up today in my portfolio. But keeps threatening to break that. I put it's an alert there at 47 because it hasn't cleared that for a while. Now, so the cash burn came down massively. It's a recovery play, and they are hoping for profitability now. They've got enough cash to get there. And it could be a recovery play. Of course, one of a few in my portfolio. Mano didn't play out, but they've released news into a bad market there. But Mano's still going to be on the watch list here because they are having sector tailwinds. Like I said, the highest number of companies going to liquidation in 30 years administration, and that's their bag, of course. So I'll watch that. But In fact, look at the Mano chart. Look at that. It's just broken that almost, well, it's a tentative support. It has bounced off that before, but it's not now. So I'd say that's, what is again, too early. Shouldn't have gone into this. I'll talk about this in a bit anyway. But let's, well, Celebris is up. So what I want to do is construct my portfolio for people who are new here. I want to be leveraged towards winners, and if I've got a new investment, I keep it small until it starts to rally and starts to form an uptrend, and then I'll average up. And they were therefore leveraging towards winners rather than losers. So any loser here, not on the fund side, but individual stocks. If I'm losing, it on this side, if it's red on this side, it shouldn't be really above 2%. Well, ADF is at 2.1%, but it shouldn't really be above 2% of my portfolio on this side. So I shouldn't be leveraging towards winners. So you can see the buy prices here when I bought them and the stop losses. And you can see there pretty much, if it's in the red, that is a fund. It's only down 2%. It's a bond fund. So I don't really include that. But pretty much the biggest section should be in either, green, blue, yellow, and the smaller section should be in red, or they will be in red, or they could be in red. So there we are. And that's the exposure, 7 companies in profit, the weighting of 38.7%. Companies in loss is 4 of them, but they only take up 6.2% of my portfolio. And like I said, if all stop losses kicked in on individual companies, my portfolio would go down by just over half of 1%. So limit the downside, don't limit the upside, pretty much. That's what I'm trying to say. That's what I'm trying to do. It's a tricky market, sir. Very tricky. That's the breakdown. Equities, funds 10, bonds 17, cash 28, and companies individual performance 15%, and fund performance 6.8%. Yeah. Okay. Is there any thoughts there? Oh yes. Sorry. Someone did ask about. I don't like Mano, regardless of how good the business is. I don't know what they do because they can cause stress. A lot of people who never get caught up in legal battles. I know what you mean. It is a little bit of a it's a morally you have to question yourself. It's like why people don't invest in cigarettes and stuff. But a lot of what they do is it's I don't know if you most I mean most of the cases they have are directors acting fraudulently. So it's director loans, and it's directors taking money out of the business. When it's owed to creditors, whatever, and the debtors, obviously. So that's what they do. That's most of the makeup of their business. So by the way, also, Alan did say he sold Synectics. Of course, very sad news was the last week of Paul, CEO, passing away, which I don't think is that old. I spoke to him a month and a half ago, interviewed him. So it's very sad there. And so I know Alan sold on that news because he holds about 3.6% of the stock. And if you take it down, in my mind, I mean, I wouldn't be surprised if maybe a fund takes that off him or someone else just takes that off him in a place. I don't know if they'll be sold, in the market. I don't know. But as far as operations are concerned, it's always a tricky one, isn't it? Because they're a 40 million pound company, and I don't know how many employees they have. I'm assuming he's not in charge of sales and operations, all that stuff. They have sales teams for that, and they also have partners they hook up with who resell. So I wouldn't think any contracts operationally will be a problem. Of course, there's always uncertainty when a CEO steps down, but it depends on the involvement of the business. But I assume they have systems in place that deals with operations and sales and all that stuff that will carry on. But obviously, they need a nice sort of inspiring CEO to take the helm there. So, yeah, it's very sad. And like I said, it does put things into perspective when things like that happen, because you think, oh, you know what? You could be, one day just, conducting business, getting involved in things you think are important, and next day someone's gone, and think, wow, it's amazing. So life is very short, and often you do think this is all a bit of a game. Can you beat this game? Can you win this game? Life is a game, pretty much. So sometimes we take it too seriously, I think. Anyway, as the US headed for recession, what does this mean for UK stocks? This is important. Seasonality is at play here as well. September is widely regarded as one of the worst months for stock market performance based on data stretching back to the 1950s. And this is US. Now, the US is like the moon, the effect of the tides in the UK, pretty much. Whatever the US is doing, the markets, we tend to follow. We don't seem to rise as fast as them. We do fall as fast or faster than them. So maybe it's good to have exposure to US stocks via funds or individual stocks, maybe. But December has been the losing month for stocks in each of the last 4 years and 6 of the 10 last years, 10 last year. So 6 out of 10 last 10 years. So here's a summary, by the way, New York Stock Exchange, of the best and worst months of the last 20 years. So it's good data here. Worst months, January, February, June, August, September. So we just come out of August and we're going to September, you know. Best months, April, July, October. We're going to that. That can be volatile October, though, but it can perform well towards the back end. So we are now, Q4 is generally quite good. We do have, presidential elections. This is a chart worth looking at. And you can't ignore this. This is the inversion of the yield curve, all right? I don't know if you know what that means, but in government bonds in America, they have different duration, 10-year, 2-year. And generally, the longer the bond, the higher the yield. It should play that way. At the moment, when that doesn't happen, and there's worry about the economy, the 2-year yield goes up, and because people are selling that, they're buying it longer dated, out because of uncertainty. And so what happens is the 2-year yield is above the 10-year yield, which shouldn't happen. And it's called the inversion of the yield curve. So the yield curve, it should be sloping up, now it's going down. And look at this. This is a weekly chart going back to 1989. Whenever the yield curve has dipped below this, that's a zero level, that's minus 0.2, dip below that and come back out within 12 months, pretty much, 12 to 24 months, there's been a recession. The red bars are recessions, okay? Now look where we're at now. And in fact, there's never been a dip, an inversion of the yield curve this steep, ever. So that suggests there's some worry around. And I don't know what that is. I have no idea why it's, if you look at the economies of the world, they aren't that bad. It wouldn't be as bad as, say, back here in .com. This is only going back to 1989, but the inversion of the yield curve has predicted every recession since 1955. It only made one false prediction, and that was 1967. So I'd say that's quite accurate. It may be a false signal right now. And also what's telling is oil. Oil is generally a sign of global growth. And like I say, right now, Brent is at 73. WTI, American oil, is below $70. So there's some big signals out there suggesting something's not right. So a bit of caution may be needed. However, on the plus side, you have the expectations of the Fed reducing interest rates. So, which way is it going to go? But I was surprised by this. Apparently, look at this. This is when the Fed reduces interest rates. So 1995, 1998, 2001, 2007, 2019, this is S&P 500, a week after they reduced rates, pretty much, in 1998 and 1999, 2019, sorry, the S&P dropped by 5% and 3.2%. But generally, on average, the first 2 weeks have been so negative. In 2019, of course, it was negative for 2 months, but pretty much on average, after 3 months after the first cut in interest rates, then it tends to be on average 2.5% up. And over the 6 months of a year, it performs quite well. So there may be some volatility ahead. Plus, you have that presidential election. Also, look at the indices. I mean, if you just look at the indices right now, look at the S&P 500, for example, here we go. Look at this. That's a lower high, and now we're falling over. And almost you get this sometimes. This big sell-off happens, which happened with the Japanese raising interest rates and a bit of American employment data, and it's almost the first warning sign. And if you go back and see when this happened last, when you have a big sell-off like that, This after a recent high, it's pretty much 21, and it fell by quite a bit then. If that's going to happen, it fell by 26% when the bear market. Is that going to happen again? Don't know. The Nasdaq is worse for that. So who knows? So what's the read across here? You're probably thinking, what do we do in the UK? Ignore it. But do you know what? You see perma bulls, people who are bears, I mean, on social media, and they're bearish all the time, 24 hours a day, and they're worried about everything, on debt, this and that. Of course, they're going to be right sooner or later. It's like a stopwatch, right twice a day. They're going to be right sooner or later. But people have been calling for a recession in the US for like the last 3-4 years. And the performance in US markets has been phenomenal over the last, in fact, in the Mag 7, been phenomenal. So I would say don't base your, individual investments in UK stocks on macro themes like America or China, because there's been a debt bubble, threatened to blow up in China and America for years and years, and and it never happens. I've seen people just go to cash, and almost 6 months later they realize, oh, the market's rallied, and I'm in cash. So that's why it's never really good to just come all out or go all in or go extreme, But I think, just be disciplined and and focus on individual business metrics, not stock prices, business metrics. And if a company has growth, value, momentum, and it's hard to pick these. It's very hard. It's easy to get, caught up in the story of a stock and ignore the individual metrics. It will do well if they've got that, Pay attention to risk, of course, and not reward. Start small, limit your downside. Don't limit your upside. If the entire market tanks and you have stop losses in, you don't need to worry, pretty much, But as long as you don't limit the upside, because you may have some stocks do really, really well. There are stocks that can do really well in a recession in America. But in the UK, we're not in a recession, And two examples where I got it right, where the growth value and momentum there was sort of Beeks did have growth value momentum. Yes, it did. I bought in an uptrend. It's done really well. And Manolete did have growth value. And well, value was questionable, maybe future value. But did it have momentum? No, we just look at the chart and you think, I don't think it did really. So if it was in a range, it wasn't an uptrend. Let's put the 200-day moving average on, see what that is. It's never really close. A couple of times above that was the 50-day. And it's not else. This is never raised because, it's now below that. So it's never in a convincing uptrend ever. It's got a bit of debt. And I think the market is yet to be convinced by it because it's been a downward trend for a long time. So I do think it could be a good recovery play. But as yet, that's not a convincing uptrend, is it? It's never really closed about 200-day moving average. The 200-day moving average is not going upwards. It's not sloping upwards. Day crossing that. If you go as a different example of a trend, look at that. Sort of, it broke convincingly on that day with the trading update, gapped up above 2, got the golden cross here, and like I said, it's not even touched 50-day moving average yet. I see this now as a nice level of support going along here, going sideways for a while. Maybe this is resistance at sort of 290. And that sort of support. So it may oscillate between those two up and down. I mean, support and resistance are a little bit like trampolines. They're not hard support. They bounce up and down on that. But, that's good. That's something good there. Yeah. But yeah, do you know what? I'm going to be so disciplined now on companies. The aim states to maximize return to creditors, which cannot be such a bad thing. Yeah. Talking about fidget syndrome, what's the based on how high it's gone? Look at NVIDIA, it's really worth, yeah. No, NVIDIA, I mean, it's literally, if you look at it, the S&P 500, and it just keeps going up, it's just nuts. And I just think it is one of those things where, it's had a party for 10 years pretty much, the S&P 500, and it's got to come back. I mean, if you just look at where it was previously, and it was going up quite nicely, look at it. This is the great financial crash. But it was quite steady before that. It was a steady rise. Okay, .com crash, right, yeah. And then it just went nuts. If you look at it's a weekly chart in the S&P 500, where is it? I mean, look at that since it's almost like indices since 2009, and of course that was stimulus. Just went up crazy. You still think it's got to come back. It's got to have a pull back. Eh? There's a certain amount of contagion because America is the biggest capital market in the world. So anyway, yeah, but you often see these tops because, like Nvidia, and you got 5, 6 stocks now that make up the entire sort of in S&P, or they can sway the S&P quite easily. And you'll have Nvidia sort of people buying the dip on the first dip, and then it rolls over again, and you have less people convinced of buying the dip. And those dip buyers become less and less convinced as it starts to roll over. So you often get an aggressive, where is Nvidia? You often get an aggressive sort of re-rating or bounce on the first sell-off because people have missed out jump in. And where is Nvidia now? It's down, it's up 1.2%. That's the same shape as the NASDAQ. So that rally, lower high, lower high. Where will this get to? It needs to break this previous high near 130. If it does, maybe it's going to go up again. If it doesn't, it's a lower high. And this is a poster child of the rally in America. If it fails, and of course the growth has been spectacular, but you can't keep growing at that rate. You can't keep having 40% on 40%, on 40%. Just not unsustainable. Sooner or later, the comparatives will start to hurt it. So anyway, okay. Anyway, let's get on to some thing. Oh, hang on. I love to see, you can see equally weighted S&P, I think it is, and it's literally maybe I'll try and find the chart for that next week, but it's not it's not really performed that well. Okay, all right. So let's have a look at some stocks. Next investment I'm going to make. I nearly made. It's odd. I was looking at we looked at it last week. And this is not it's not an uptrend. They got cash, and it's not particularly growing that fast. But we looked at this last week. Oxford Metrics. It's got plenty of cash. It's got about 50 million in cash. What's the market cap now? It's literally 106 million. So half of it's in cash. They're profitable. Look at that. Look at that support it's had there previously. So it's now in this sort of range, and previously it's bounced off this 80 pence level. And you can see it's way oversold on the RSI. That's not a reason to buy, though, of course, because it just but you want to see a bounce above that. It obviously clear back above that. It's oversold, but back above that. But they pay a nice little dividend. I'm thinking, am I tempted there? By just reading through the fundamentals, I want to see an update. I want to see that they're going to achieve their growth. They're going for 70 million in revenue. They're halfway through their 5-year plan with the new CEO. They want to see revenue of 70 million by year 5, and I think pre-tax margins of 15%, which is decent. But I think it's one worth keeping an eye on because very interesting company. Okay, let's have a look at some news on stocks. So if you're new to this, by all means, join in on text. But we're looking for, good, great, exceptional companies, or maybe some recovery plays. Now, these are some results that have come out in the last week. I've updated them on the Microcap League. So first and foremost, Arcontech. Ticker there is ARC. So if you go to the Microcap League, you can arrange these by any column here, by company name. But Arcontech, here we are. It's number 34. It was 40 last week. And how many stocks we got in here at the moment? 76. All right. So it's number 34 out of 76. And they had, I think, final results. Yeah, I haven't put half your results in. So all the scores are based on final results. But we've got 120 a share. Okay, so at the end, just let me know what you think is, whether you're interested or not, particularly fancy. 120 a share, Target price 180 by the brokers. That's 50% upside according to the broker. Market cap to 16 million, so it's not big. Enterprise value 8. So that says already, of course, enterprise value is market cap, plus debt minus cash. So if the enterprise value is below market cap, then they've got more cash than debt. Okay, so that's quite good. Net asset value per share, it doesn't matter. Revenue 2.9. By the way, the leading independent provider of financial market data, infrastructure, and display solutions. Oh, it's a bit like Beaks, really, but not really like Beaks. Not scalable like Beaks. They supply to, they do supply to like Bloomberg, domestically, I think, a bit of that. Solutions can be off the shelf, customized, or completely new developments. Cloud, on-prem, hybrid. That's interesting. Operating profit. So they are quite small. Like I said, 16 million market cap, and their revenues just shy of 3 million. But they are making a profit. Like I said, they got cash of 7 million, which is a nice safety net, isn't it? 7 million of cash, no debt. Operating cash flow. So they are generating cash and free cash flow. They pay a dividend, 3.13%. So these are the results for the full year: 7% top line, 8% total score. So it is amber pretty much on all these. Good. So lots of cash. Potential, according to the brokers, good. Efficiency is amber. So it's not stunning, but it's okay. So tops, growth scores there. Free cash flow has gone up by 30%, but everything else is sub 20, between 10 and 20. That's why it's amber. Above 20 or above is green, pretty much. Value, price of sales, 5.5. PE 15, price to book 19, EV dark. That's good, of course. The EV is very low. Price of free cash of 13. Good health. Efficiency, they don't have gross margins, but their operating margin is 29%, which is good. The return on capital is at 9. You want to get above 10 really there. And you can see here it's starting to rally by looks of it, because the share price is above 50-day moving average, above 200-day, but we've not had the golden cross here. But it's always nice to see a company that's profitable with a lot of cash. Hopefully next week my internet will be. Oh, what am I doing here? ARC, Arcontech. It's always good to see a company that's profitable, a lot of cash, because they can afford to do stuff, acquires things. Why isn't this loading? Oh, there we are. That's my internet. It's rubbish here. I will be improving. I'm getting a mobile 3 router just for the office. So look at that. It's a bit sort of. You can see straight away here, can you? I mean, if you want to draw some lines, let's draw some lines here. So you can see there, pretty much that line here. It's not really close above that for a while, is it? You could. A bit of a. It's because it's quite illiquid, I suppose, and so it's quite a volatile chart. But let's have a look at the forecast going forward. Let's see where they're so they're looking at 20% growth for 2025, which is nice. And I put 20% on the next 2 years. I think they only had forecasts for 1 year. But look at this. The margins are very good, And if you scroll forward and give them a sales multiple of 3, because they are, they are growing and they've got good margins. There's still not a huge amount of upside. If you put on a 3, EBITDA 13, post-tax 15, I don't think there's a huge amount of upside. But nevertheless, it's on the plus side, it's profitable. It seems top line is growing. But like I said, very small. Can it scale? That's the thing I'm thinking of. What's your thoughts on Arcontech, ladies and gentlemen? Arcontech, ARC, is it one to keep on the microcap league? Or is it pretty much it's already risen enough and there's no more potential in it? We could watch it. It is profitable, like I say. But is it something you're interested in keeping tabs on? Because, like I say, it's quite healthy, it's profitable. And I don't think it'll get into much trouble. But maybe it's worth watching, if it pulls back. Who knows? Harish, I like. Looks an interesting company. I put it on my watch list. Steve, that's Steve. Nigel, very small. AB North. Keep. Rob, keep it, Rob says. Small but perfectly formed, so keep, says Pete. Okay, that's a thumbs up then. Arcontech remains on the watch list. Yeah, it's a nice little company, isn't it? And you're thinking, with a bit of a pullback, maybe it's worth reading a bit further into that, do some more research. Maybe it can scale, maybe get a contract where it can scale. Who knows? Okay, all right. Look at my squash there. No, it's quite hot in my office here. Okay, what's next? Let's have a look. Oh, by the way, we will be looking at XP Factory. Concurrent. Oh, we looked at this a while back. We were questioning whether it's done very well. But, let's look at it now. It's ranked 9 of 74. Designs and manufactures a range of computer products for use in critical embedded applications. The company's established, CPU. Basically, their stuff goes into a lot of in computers in rugged areas, including defense. And as we know, at the moment, there's so many high-profile wars going on, and the world just seems a less safe place at the moment. There's always wars going on anyway. I think they average about 15 wars every year, but they're smaller ones. But at the moment, there's some high-end wars going on with high tech is being used. So they came out with, was it their half-year results. So 125 a share, target price 197 from the broker. That's 57% up. Market cap 107 million, enterprise value 96. So again, it's nice to be in the green. More cash than debt. Volume's good. Average volume is almost 500,000. Revenue 31 million. Operating profit 3.6. Cash 11. No debt. Operating cash flow. I like to see this nice quality. Free cash flow. So it's all green there. It's all good. Now, this is full year results. We're ignoring that. And the total scores are made up of the full year results. Of course, when these next set of results come out, these will be included, of course, in that, because that's the first 6 months. That's the full year. But this is the first 6 months of the next year. So let's have a look. Oh, okay. So we can see here it's deteriorated a little bit on the operating cash flow and free cash flow from the full year, because then they did really grow. And 73% last year, 38%. So still good growth. You should continue nose up that. But it's not as impressive as last year, maybe for a smaller base, but still good growth. Value-wise, it's improved really. PE is 23. It's not low. EBITDA 15. They got cash of it's gone down a bit there. That's probably because of free cash flow. Yeah, gone down a bit, but it's still very healthy. Decent gross margins for what's a hardware software business. Operating margin good. Return on capital good. Broker target there. So let's look at the figures. So they did 16. Okay, so you'd think they're going to do more than 31 next year, maybe. If you're doubling it. Yeah, and that's that's a lot better. 2.2 on 3.4. So yeah, it's looking good there. Okay. Oh, finance. They did raise some money last year, did they? Probably. That's why. Okay. So that is deteriorated a little bit. Let's look at the forecasts here. So going forward, they look at decent growth. Top line is double digit, low end double digit apart from 2026. But are the margins improving? Yeah, the margins are getting better apparently. 13% net margin. That's good. Profit before tax margin is very good as well. Again, it's not compelling on the value front, but if this keeps performing, could do well. So CNC, it's a good looking chart. Look at this chart here. So I don't know why I drill those lines in. You can see it's coming down in this range. Okay, downtrend. You got some lower highs, lower lows, classic downtrend. They broke the 200-day moving average. Then broke this there. If you zoom in, and so that was the lower high, then zoomed up there, maybe on some results. And that's sort of the end of a higher low here now. And so what you want now is a higher high. And this breaks this previous highs, and then you start to see this trend happening. So again, you can basically do that same formation in the opposite way, higher highs, and higher lows. So that's nice. I would like to see it was a gap kept up on this news. Be interesting to see if it gets higher than that or it consolidates. When was this? Back in start of December. It's almost like when wars start picking up, you think, okay, let's look at defense companies involved in that area. But that's decent company, that. And going forward, it looks like it's decent. And I can't see, to be honest. There was that thing, wasn't it? Do you see in the week, Labour stopped supplying 10%, I think, of arms to Israel. It's not going to affect too much, is it? But I can't see the world getting any more peaceful, sadly. So companies like this will do quite well, I think. Anyway, Concurrent. What's your thoughts? Anyone in that? Anyone? It's a company, actually, by the way. Daily volume is mostly very few high-value trades. Sorry, CNC, yeah. Wish I had bought. The chart shows a lovely share price uptrend over the last year, yeah. Nat, good. CNC, keep, yeah. I'm holding CNC stock. Nice return so far. Definitely keep on the list. Well on Pete. Same keep. Conk, okay, keep, yep, it's good. CNC. So, two good quality companies there. And, sometimes this is when, hang on, what is it? What's that saying there? Interview. Oops, sorry. Hang on. Sorry. Stop here. Didn't see that. This is when you can have pullbacks. Very good interview of Miles Adcock, CEO on Desert Island Investor. Oh, okay. I never heard of that. Listen, if we do have a unmute my audio. Sorry. Sorry, I'm back. Did you see me? My bloody internet went off. Frozen. Yeah. Sorry. I was just saying about Concurrent. If we get a general sell-off, then and quality companies like this suffer, then that's the time to take advantage. Because let's be honest, they're not going to get less busy because there's always wars going on, and sometimes you do have companies selling off like this in a general sell-off. And like, when you see, I mean, even that was probably the sell-off last year, last month, and we're down to 108. That's only popped to 128. So sometimes things like that, it's worth putting an alert on. Let's look at this gap here. I'm just going to put a little alert on there. Add alert. Right click on the chart. By the way, if you're new, there's videos how to put alerts on charts on the website there under technical analysis. Have a look. CNC. It's not a long way there. Do that today, but in fact, I want to break it down there. Break it down here. That's higher. There we are. Right, I'm definitely have to fix my internet. Next one, Manolete. Well, we've seen that. I'd be interested to see a broker note coming out. The broker note coming out soonish, next week or so, I think. So once we get that from Canaccord, their new brokers. But you can see there's improvement here. But like I said, there's a worry about, and I did say it a couple of times, there's a worry about the lag they have between cases being won or case investment starting, cases being won, and then the cash collection. There's a lag between the revenue recognition and then the cash collection. And they've also got some debt. But like I said, this is based on my sort of forecast here. But you can see, there's improvement pretty much on the growth there, growth 27%. This is the issue, the free cash flow, operating cash flow. There's always a lag here. And so it's worth keeping an eye on that between the cash collected and actually, revenue recognized. But nevertheless, you can see it's 12 million debt there, gross gearing. They have gone from a negative to a positive on the revenue. It just needs, I think it just needs to start collecting some cash here. And then, we'll see the chart. But it's not yet in an uptrend. But I think it's one to watch because, like you say, the tailwinds of businesses going into administration is large. It's happening. And they've got a lot of work on, and those caseloads are getting bigger. My internet's not loading at all. That's a chart there. Anyway. Oh, sorry. Yeah. That's Manolete. Let's move on. Michelmersh Bricks. Let's go Michelmersh, and they make bricks, which is not surprising. They are number 19, down from 20. Let's have a look here. 7 market-leading brands: Blockleys, Carlton, Fabspeed, Freshfield Lane, Michelmersh, Florin B. These are bricks. I didn't realize it was. Well, obviously they are. I'm not familiar with brick brands, to be honest, but obviously they've got lots of brick brands, 7 of them. So 98 is the share price, 170 target, upside 73%, apparently, according to the broker. Again, 91 million market cap, enterprise values 80. Decent again. Well, they're not far off net assets, though. In fact, net assets are above the share price. So I always quite like to see that when a company is profitable and they have net assets run about their share price. Volume's decent. Operating profit 12.3, cash of 10.5, no debt again. No, apart from Manolete, all these companies no debt. Dividend yield 4.6. So this was the half-year results, and you can see here. Now these scores are based on full year. You can see here half-year results there. Are not good. In fact, let me text my wife. I think my kids are in. Let me just send a message to them. I think my kids will be on probably downloading a game worth about 150 gigs worth. Hang on, and I can often stop. Hello. Can you stop downloading or playing games, please? Because my internet's dodgy down here. Thank you very much. I'm doing the webinar. Thank you. Bye-bye. Right, there we are. There we are. So, so there's been a bit of an underperformance in the first half. And in fact, the broker downgraded them slightly. And you're thinking, okay, but they make bricks. Now, the Labour have got a house building policy. Surely they'll benefit going forward. And I did say, I think, worth reading, medium term, they're more bullish. Short term, it's been very challenging. So value, it's all right. PE 15. It's going worse there. But they've got the cash. Look at the cash, though. That has gone down from 10 to 4. So it's quite concerning that. Where's the cash gone? Gross margins, of course, they're quite a capital-intensive business. So the gross margins are 36. Ideally, you get green above 40. Operating margin decent, but again, it has deteriorated from, their full year. But the broker's got that. And like I said, it is rolling over now. The share price is down over the 50-day. So let's look at the figures. So 35, so it's less than half of that, isn't it? But operating profit 4, 3, So net cash is investing. So they lost money in operations, this cash collected, and investing, and I assume that's dividend. So net decrease in cash. Wow. There's 7 million. So the forecasts are a dip for this year This is based on the half year, the first half this year, but they're expecting to grow again in 2025 and 26, double digit for 2025. So I think this could be an interesting play. Like I say, if the housing, let's have a look at the MBH when it loads. Yeah, see it's gapped down here. Let's scroll out a bit. Let me just yeah. So it's come down. It's in a range, isn't it? A messy range, pretty much. It's hit a low here, rallied up, bounced down again. It's in this sort of range of what 92. In fact, I put an alert here, 92, and the top end of the range is 108, pretty much. That's had a load on that. Yeah, MBH resistance. I don't want to hit the thing there. Let's see if it breaks that. But what do you think? What do you think of this? Because it's concerning where their cash has gone. Let me know what you think of this. Uh, MBH. My dog's in here. Oh, sorry, I'm back now. The problem with the likes of Mano is it's never going to be an ex-Amazon at all. There are very, very few companies going to be an ex-Amazon. Thing is, that's it. That's exactly what we're trying to look for. So, there are companies that say they're exceptional, great, and good. Good, great, exceptional. Our Mano likely to benefit from super rich bailing once Rachel Reeves announces a hike to CJT. I don't know. Well, no, if you honestly look at the stats on there are a huge amount of of company going into administration just from a lag from COVID and now high interest rates and inflation, of course, has affected so many businesses. Just do a general search on. In fact, that blog I posted shows all-time highs in administration, and the drivers of growth there are just the amount of cases they're doing has gone up. It's a record number, and the size of those cases. So the margins get better. So it's still worth looking at. Anyway, we'll lag house volumes. Look the way CRN interims out today, smashing it in the house building league. Oh yeah, is that Khan? Probably the house builder type stock. What happens to these stocks in a recession? Yeah. Yeah, I wouldn't be Mick says sorry, Mick that Rob saying that house builders type stock. AB says lag. You can't in terms of today. Let's look at that. Mick says I wouldn't be going anywhere near industries that could be heavily influenced by the Labour lunatics. Yeah, Brickability has a similar looking chart as Dan. Avoid what you think housing starts are going to increase. Yeah, I'm also a little bit cautious. I can't see this Labour. They're planning to do 1.5 million houses over the next 5 years. I can't see him just handing this kind of development to house builders on a plate. These big corporate house builders who generally make lots of money when the housing market is very good, lots of money, pay nice dividends as well. It doesn't sit well with me. Labour's going to say something that you have to do 70% affordable houses or something ridiculous. I don't know. I can't see him getting an easy ride of it. It just seems too good to be true. I don't know what they're planning. Well, we'll find out in the October budget. But I just can't see that. Like Taylor Wimpey, for example, one of the best house builders, at all-time highs, or 52-week highs, keeps breaking it. And I'm thinking, they're not going to give him an easy ride. I can't see it happening. I really can't. So maybe worth a. What do you reckon? MBH worth a watch. It could be one worth a watch that could benefit, because while house builders may come under the cost a little bit, will house brick makers, or who knows? May they avoid the Labour clampdown in some way, or the tax squeeze. Who knows? So let's leave it there 'cause it's probably worth a watch, just to see where it goes. But it hasn't performed, is it really, on a chart basis? It's a bit messy. Well, saying that, it was down at 50 pence, 2017, and it's got to 160. Yes, that's not going to be Amazon either. Okay, and finally, Escape Hunt. I really like this company. Initially, a lot of things have changed. No fault of their own, I suspect. There's been a lot of change in that industry, from energy bills to now the real living wage has gone up, and of course that will affect a lot of their people because they are on that cusp of, of earnings of national wage, and they have to be pushed up by what did it go up by? Was it like 10% or something? And then energy prices going up, and now they've got cost of living where people are spending less, going out. So they've had, on three fronts they've been hit. So these are final results. 14 pence is I added these to the microcap league because I wanted them but they're not profitable at a pre-tax level. But maybe, maybe they will be soon. We'll see. 14 pence. Target price 32 pence. Upside 120%. Mark 24 million. Enterprise value is 24, pretty much. A little bit more cash than debt. Average volume is like 50 grand a day. Revenue 57 million. Now this is 15 months. They've changed their year end.
Justin, you're not sharing.
Oh, sorry. Okay. What am I doing then? Okay, share. Let me share. Sorry. Right, there we are. Just where are they at the moment? Yeah, I added XP Factory. Someone added. We could look through them, but they are sort of right 21 on growth, I think. 14 share price, target price 32, 128 upside according to the broker. They're fine. They've got a little bit more cash than debt. Volume is 50,000 a day, so it's all right. Revenue 57 million. Like I said, they did end the year end to capture so the busy period, I suppose. I've been flattering towards half year. But operating cash flow is good. They're a cash business, of course. Free cash flow is good. So growth is good. Value is decent. Momentum's flat. Health is amberish. Efficiency is okay. Potential is 13, is tops. So we can see there, good growth across all metrics. Of course, PE is negative because they're not earning net profit. But price to book is decent. EBITDA is decent. Price free cash flow. They got net cash 77,000. Gross gearing 15. Current ratio is questionable, so they need to cover their liabilities within 12 months. They're going to earn some more cash to pay those off. But margin's decent, His gross margin 60. That's good. And I did see an interview with Richard saying, we've, taken on board, we've absorbed the costs. We've not passed it on to customers. Our volume's decent, our footfall, all that, but they're not paying any more, and our costs have gone up because of wage, inflation, energy, and of course, I suppose people are spending less while they're in there. But yeah, and there's momentum. Now, this was due to become more profitable more quickly or quicker than it had. And of course, I think they've underplayed that. They should have said, they tend to sort of brush that under the carpet a little bit. The brokers changed and the forecast changed, but I think this just coincided with the time where energy prices went up and living wage went up. But like I said, it's hard to compare this. This is 12 months, by the way. So we're comparing to 15 months. So the growth is going to be big. So it's next extra 3 months. But nevertheless, you can see here, even on 15 months, it has come down. It's improved the loss, but they're still loss making. So going forward, let's look at these. Now these are going to be, of course, that's 15 months, but that's 12 months, but they're still going to be growing apparently. And they are going to be going for the next 2 years, top line. So that's quite impressive. Now, the concern to me is the margins. So top line growth is good, but the margins are a concern. And I'm assuming these could get better if they can put their prices up. But at the moment, a net margin of 1%, 1.4, 1.6, it's not going to cut it, And EBITDA margins here, they've got to get up to 20% or something like that. So gross margin is good, but yeah, to me, I'm just really concerned about the margins here. But but if you look at, if you put on a half, sales, 5 EBITDA, 10 PE, then there's no upside on the profit, on the net profit at all. There's on the EBITDA and the sales. So all in all, I see 31%. So there's a little bit worried those margins, the net margins are thin. Again, they could improve if they push up their prices, I suppose, but they're not doing that, and that's not in the forecasts. Let's have a quick look at the chart. XPF. when you're ready. Like I said, you can see that it's come down, series of lower highs, lower lows. Now, yeah, what I would say, right, is sentiment around, leisure stocks, hospitality stocks are at an all-time low. Generally, that's not a bad time to invest. They've also got a £10 million revolving credit facility with, was it Barclays? I think it was, which, you know, suppresses any worry about them having to raise money. So if interest rates come down and people feel a bit more flush and people having new, wage increases, then there's a bit of surplus cash, spending cash, but people can go out and spend a bit more money. So I think, like I said, there's no worry about cash, and they've gone through a hard time, and they're not burning a lot, and they are going to be profitable, slowly profitable. I think on sentiment alone, this could rally. What's your thoughts? Anyway, boom, good company, probably do well after the recession. I mean, UK recession, yeah, that's Rob. Good company, good product, but no good with economics. Sentiment for SP gains. Yeah, I think they are quite good. It's just they've come in a lot of, like I said, they've been hit on 3 areas there, but I think they should have shouted about that more because they've tend to keep it quiet, and then we've just seen them. We're not earning profit there. We're supposed to earn profit, and and that maybe have a plan for that. Explain that it's going to be tight for a year or so, but we're going to expand. Not for me right now, Steve. Keep for me growing. Tight as Nat's arse margins, leave alone. Nat is in the in fact Nat's next. I mean, obviously Nat is in the animal, well, they're all animals, as an insect. I don't see how they can increase their margins in the next few years at least. Yeah. Well, they may get, economies of scale, better systems in place so they are using a lot of data and they've invested in the systems as well, they've said. So it may be that, and like I said, they can see what games are playing the best and get rid of the ones that are not playing the best. So they could become more efficient. And actually, with inflation, wages do go up. So they can charge an extra couple of quid a game, maybe, or whatever, on certain things. Revenue good, but headwinds on margin, very concerning. Watching, yeah. Yeah, honestly, I think there's no worry about their cash. They've got that revolving credit facility, and they are going to become profitable. And I just think if sentiment towards these stocks lifts a little, it can rally. You know, so I have literally, you know, yeah, I think it needs to get again. It popped there and came back down. It needs to have a series of higher highs here, get above. Like I said, it hasn't really. It's it hasn't gone any lower here on these results, which is good. And I'd like to see start breaking here and make, where's the previous high? I say close above 16, 17 and carry on. But there you draw this line, this line continues to go down. It needs, so it hasn't had, it had a bit of was that a higher low? It needs some higher highs. So it needs to start breaking above 15, 16 and start saying that. And above 15, 15 and a half, and that needs to be then support, pretty much, this level here. It needs to get above that level. And it needs to bounce off that and move up higher because I think sentiment will change. You'd be surprised when everyone's bearish about things, things can change. Anyway, a lot of ifs there. Yeah, I know. But sometimes if you invest at the most bearish times, you do quite well. You do quite well in stocks. There we are. They need to open more venues to drive revenue. They can only open in big cities. I feel have a limited growth. Yeah, that's David. Yeah. Well, they are going to be opening about, I think that's what they're saying about, is it 5 to 7 stores a year? So they're still going to be opening, but not as fast as that year of expansion where they did about 20 in 1 year, which is crazy. And to be fair, to do that amount of expansion in 1 year and, and not sort of, well, I suppose spend millions and lose millions is quite impressive. These sites, by the way, oh yeah, another thing, Nat, A lot of these sites are new, of course, and they take a while to get to, operational efficiency and profitability. So once these sites start maturing and there's less new sites lagging and dragging the margins down, it should improve. So margins on mature sites improve, of course, because staff, everything get better and more efficient. And you don't have to drag staff to other sites to help them train and all that stuff. So you have less training going on. That costs as well. So you can have that. So it's worth a watch anyway. Business council tax hike. I like it hitting hard. Yeah, Mick. There we are. Yeah, exactly. Anyway, hold on tight. It's going to be a rocky market for a bit, but I mean, there will be opportunities, I think, in the market. And like I said, good companies we just looked at then, like Concurrent, they could take a bit of a knock. It's worth jumping on that. Who knows? Anyway, have a nice weekend. Next week, I will have better internet. I got a 3 box. It works very well. But I tried to put the SIM card in, and it wouldn't stay in. So I felt like a replacement. They said 5 to 7 working days. Well, it's amazing. I ordered the 3 box originally, came the next day within less than 24 hours. But the replacement, it took 5 days. So hopefully by this time next week, I'll have super fast internet down here. And it was getting a 150 meg download, whereas at the moment, all we have is about 24. It's ridiculous. Anyway, thanks for any updates. I'll put on the blog, of course. Any buys I make, I'll put on the blog. Just get the kids and the wife off the network whilst the webinar is going. I agree. I can do that, actually. I've got little hubs in their rooms. Just shut them down. That's a good idea. Thank you very much. Speak next week. Cheers. Bye 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 bye.